which we normally do or on all that. But today was an experiment to see ki, we started this podcast in COVID and it was always a virtual thing, right? So today essentially was an experiment to see ki, how essentially would a live podcast in a webinar format work for us, and this is all a part of it. Thank you so much for coming and basically giving our efforts a worth. To start with, we have today Mr. Abhishant Pant, who has been one of my role models as well as my mentor, and he has been like one of the leading fintech evangelists as well as fintech gurus of India. He's the founder of a company called the Meetup, and he does a lot of initiatives. I mean, I'll leave it to him to talk about it. We have Vikram, who has essentially been into he's essentially into multiple things. He is a research head at Varanium Fund, and before that, he's essentially also a director of fintech at SPGM. We also have Amit Kapoor, who's the founder of OneStack. This is essentially a business which is going to digitize and revolutionize banking as we know it for everyone. So over to Abhishant sir, a brief intro of yourself. I mean, I don't think anyone here needs it, but over to you, sir.
I don't know what I do, so my apologies for bothering you with that. We are simply an ecosystem for financial services startup. That's who we are.
So Vikram, I think Shreyas has already introduced me enough. So yes, and happy to take any questions later on also. Thanks.
Hi, my name is Amit Kapoor. I'm the founder CEO of OneStack. We've built a neo-banking application for all the long-tail banks in the country. Before that, I started a company called AirPay. As a co-founder CEO, built that company into payments, catering to services in hospitality, education, BFSI. Thank you.
Thank you so much. So coming back to the topic of discussion, RBI's guideline on digital banking units. As we recently, I mean, you must be aware, RBI recently issued a guideline outlining a certain, a few things around digital banking units and how banks will. Yeah. So RBI did issue a guideline on digital banking, which will essentially change banking as we know it for a lot of people. The idea is that banks now will have a mandate in the coming years to essentially source business digitally and to provide the service digitally across multiple channels, online and offline through digital models as well. So my question here essentially we'll essentially start this discussion with Abhishant sir, and I would want your view on these guidelines and how does this essentially affect the entire fintech ecosystem as we've already seen. What do you think, how do you think multiple banks should respond around it, and how essentially as an ecosystem you will see an overall impact on it?
Thank you. Thanks, Shreya. So first and foremost, when you look at DBU or Digital Banking Unit, this is essentially nothing but a new avatar of an experiment which was done approximately 30-40 years or earlier than that, which was establishing the, as we call it in Hindi, Kshetriya Gramin Bank or regional rural banks. The idea behind those rural banks was to take banking to the last mile, wherein your access to it in the last villages, towns was not there. The purpose of an RRB was to work in collaboration with the state, identify one bank who is the lead bank of the state, essentially as part of the state level bankers committee, and with that creation of an institution which will serve the local village ecosystem going up to the villages with population of 10,000. So that's where from that as a thought process RRB started. The RRBs were much lesser infrastructure as compared to a typical bank. A typical RRB branch was a shutter with a space of 10 by 15 at max. They used to have a sanduk, aluminium wala, agar aap logon mein se kisi ko yaad ho. So an aluminium sanduk in which whatever cash comes in will be kept. There is one guy on the counter and one guy to service. And one security guard if at all they need it, otherwise most of the times that was also not there. So the purpose of creation of that value chain was essentially to bring banking services to the last mile when traditional banks could not venture in. the idea of DBU is in that sense the 2020 version of that, wherein you are trying to bring digital banking services to the last mile by again providing the financial institutions who are lead financial institutions in those geographies a mandate to digitally empower customer at this point of time, both assisted or digital mediums. The purpose is same. Earlier, you were looking at people not to be left behind because of lack of physical branch infrastructure. This time, you are looking at people not to be left behind in the digital journey of financial services as that gets undertaken. That's my view.
Thank you so much. Vikram, do you have any views on the same?
So just to divide this into two parts, when we look at overall, besides what Abhishant said, it is not like that in tier 2, 3 cities you don't have mobile phones nowadays, right? So you have mobile phones nowadays, even if you look at UPI coming up with UPI 123 or UPI Lite, will also make sure that the finance inclusion is happening. But it is the overall holistic approach that we are trying to look at from the digital banking perspective. The trust normally comes when the bank themselves are putting something versus, let's say, it is done by some partner. Right? So that is where the main idea came, that why don't we look at, apart from, let's say, fintech directly doing some of these things, like neobanks who are doing some of these things, or some distributors who are doing that. Even when you look at from the retail Kirana network perspective, you have players like Pay Nearby and NeoGainers and many more who are doing something similar, where at every Kirana store you are creating a banking as a service model, along with many more, let's say, instruments you are distributing and all the business services you can distribute. And what now you are looking at is a dedicated center where banks, commercial banks specifically, are creating these touch points where multiple different things can be done. Now, what are these things? We will discuss, of course. But to give a very simple idea, whatever is on the asset side, liability side, and value-added services side is what you can bring in terms of the value add to the last mile customer through these digital centers. So we'll discuss much more in detail, I'm sure. So that will be more clarified on this point. But to give you a simple perspective, this will become a one-stop solution for multiple different things, which otherwise is very difficult to bring to that last mile customer at a cost, at a pace, and at a quality that you may want to give. So this is what my view is.
So RBI has always been very progressive in their thought process. If you see globally, what has happened is there is open PSD2 licenses which are there in Europe. Coming across from there, in India we have account aggregator framework and now this DBU. The whole perspective, the way I see it is, most of our banking have been living on legacy infrastructure, and this is a welcome change for them to be pushed to kind of get innovative and start investing in digital architecture, because today's customers, like all of us over here and everybody outside, nobody likes to visit a branch. Okay, so now if you don't want to go to a branch, you need to have infra so that you can serve him or on a mobile phone. I think this is the first step towards it. I think we've also seen a use case where SBI, which was always considered to be a very fuddy-duddy brand, fuddy-duddy bank, nobody wanted to do it, and now suddenly you have SBI YONO, and it is today one of the largest neo-banking, literally globally as well. Correct? So I think this will kind of motivate all the other banks to start investing in the infrastructure. I think taking the cue what Vikram said, the whole objective is today's customer wants to experience various financial services. Now, if you want to do that, no longer can you do it on a paper and pen model or an application form. We will not do it. So how do you make that data fungible? How do you make that data retrospective, accessible to all third-party service providers and everything, so that you can serve the customer and the consumer can continue, as Vikram said, the trust of the bank and still enjoy all financial services provided by third-party service providers.
So one question that I would actually like to throw out to all of you, and then I'll give it over to Sagarika, is that like if when you go through the guidelines, you realize that this is about digitizing the branches, right, or digitizing the banking units that are on ground as a physical touch point. Do you see this as a right way forward, vis-a-vis probably enabling the banks to actually have more infra and pushing them to develop infra around creating more neo-banking experience or more vernacular banking experience on an app-based platform delivered by third-party agents, right? Not necessarily the banks, but or maybe an end app that has a more unique customer acquisition theory, and then they go around doing that, vis enabling them to install more tech in digital and physical touch points, right? Interactive walls and maybe more machine, which will then again have to be assisted by human touch points over there for at least tier 3, tier 4. So what is your view contrasting on the both the approach?
आई थिंक सबसे पहले तो शायद ज़रूरत इस बात की है कि तुम जो है छुट्टी पे जाओ, है ना, एंड गो टू अ टीयर 3 टाउन ऑन अ छुट्टी, टीयर 3 और टीयर 4 छुट्टी पे इसलिए जाओ बॉस, बिकॉज ऑफ द सिंपल रीजन दैट अ टीयर 3 एंड अ टीयर 4 टाउन फ्रॉम द पॉइंट ऑफ व्यू ऑफ ecosystem involvement still continues to need an assisted value chain. The problem, and possibly Ajay Saab jo hai can share at some other stage with us, which is the problem with the tier 3 and the tier 4 value chain is that they still need an assisted ecosystem to enable and catalyze them. What do I mean by that? What I mean by that is, say for example, you go to a tier 4 city called Korba in Chhattisgarh. In that environment, while you may have a customer with a digital enablement which is in form of a mobile phone, but the customer will not be digitally ready from a transactional point of view. So therefore, one is something which is, say, digital native. So does a gentleman who is or a lady born in Korba today, if they are born in a right economic class, are they digital native? Possibly the answer is yes. But are they digitally, financially, transactionally literate? The answer might not be yes. So the point is that first and foremost, you need to look at the fact that all that you defined is amazing and right in those environments wherein customers are not just digital natives, but have an appreciation and understanding of what transactional financial literacy means, wherein I am aware of if I am opting for a mutual fund which is 5-star rated versus 2-star rated on a platform, what does it mean? How does it create a differential? I am aware of my wealth products. I am aware of the fact that I can take insurance on a transactional basis and so forth and all of that. So that literacy is something which is a great gap. That gap needs to get fulfilled by somebody. Who is that somebody who is going to fulfill that gap? The fulfillment of that gap, when from the gentleman is not he is not alive anymore, but he started a company called Suvidha. And Suvidha backed Paresh Razdev. Paresh, when he started Suvidha back in 2008, 9, 10, the idea was that how can you transpose the trust owned by a financial services provider to somebody who is coming and walking into a store and get access to financial services as well as with trust. Now, fortunately or unfortunately, in last 15 years, while the institutions like Suvidha mushroomed, the trust as such could not get transposed in the same manner. Therefore, realizing that and possibly a gap of that trust being fulfilled, the idea was that these digital banking units will potentially enable banks who are so-called custodian of trust, and they continue to be the custodian of trust even today. In that instances, if they are digitally empowered in the right manner, and maybe some piece what OneStack and Amit Kapoor are trying to do is to empower those last mile financial institutions with the right kind of digital enablements, wherein same service that you as a customer or you as a customer get digitally delivered to you on your phone can potentially be experienced in the assisted manner by somebody who is not digital native and driven and given by somebody who is custodian of trust. So what the financial institution in whose branch you will walk in form of a Union Bank, Indian Overseas Bank, or Raipur, Bilaspur, Kshetriya Gramin Bank is the custodian of trust. Digital value chains are enabler to get access to all services the way they could have got otherwise. So therefore, that's what they are trying to bridge. Trust and digital, bringing them together. You are talking about an individual who is self-aware and self-ready to opt for a digital product, not the one who is not ready.
So when we look at this into three overall departments, right? And when you look at this, will become a stepping stone. It is not kind of a right earlier. You know that some uncles used to go there. They don't know how to take a printout. They used to get help. They don't know how to open email account. They used to get that help. So that became a stepping stone. Today, these uncles are doing everything at home, right? So that became a stepping stone that made them digital literate, and that is now the benefit that they are reaping. So that analogy you can identify. That is what will happen next phase, right? Second layer when we look at it. So as we look at the entire banking service, right, it is connected with many different things today. So when we look at banking as a service, or when we look at on the value-added service side, like onboarding or even the loan application, whatever we look at it. So this is going to become a banking super app in a way for many of the players, and this is where even fintechs will become part of it. Right? It is not like that banks will be doing this without any fintech. This majority of the things will be automated, directly connected to bank. But let's assume that you are trying to make payment for your society maintenance bill. You can do it using your mobile phone, or you can go to that place and do that also. Right? So that is one thing which you can just do it. But at the same point in time, when you are trying to subscribe for something, some services, right? Today, you know, there are so many services which are available. And that might be part and parcel of your bank itself or digital touch point, because while you are allowed to do liability, asset and value-added services, what you can do within that is slightly gray area. So let's say people may utilize that as some way to cross-sell certain things initially. And that may become again the ecosystem play. So that is what the second part of it. Third part, when we look at, understand this, right? That local trust. When I'm in Kolkata, when I'm in, let's say, some Tamil Nadu city or state-wise, when you look at small villages which are there, I may have that trust with the local person who is speaking in my native language, which can never come whenever you are even talking on that call center and you are trying to do something, right? Here, that physical touch point with digital experience can allow that stepping stone to become more powerful stepping stone. And that is the overall idea. That is what I believe. And to make it more effective, RBI will need to make sure that some of the operational guidelines that they may come up with in future is having some leeway. You cannot be over prescriptive in some of these things. People may want to identify their niche and identify the right balance in what is working, what is not working. Otherwise, if you are very prescriptive and if something is not working, this will become dead very soon.
So I'll talk from our experience. We go to a lot of banks and speak to a lot of them. Interestingly, like how Abhishant said, you'll be surprised there are banks which have less than 1,000 customers. Correct? Now just imagine, and that's what Vikram and everybody spoke about, right? The trust is so immense. Today we live in colonies and condos and all of it. There are more 1,000 plus people, 1,000 plus flats. Imagine a bank having 1,000 plus customers. Now just imagine how his or her infra would be, right? Because he just has 1,000. So I'll not take the names, but I'll give you a very simple anecdotes. We were speaking to a branch. He said, I want a neo banking app, signed everything. And he said, but only one thing. 5 बजे के बाद transaction नहीं होना चाहिए. बोला, ये क्या होता है? नहीं, हम server बंद कर देते हैं. And just imagine, that is real use case. Server बंद हो जाता है. Why? Because he is scared कि बाहर कुछ access नहीं हो तो इसके लिए बंद करके चला जाता है. अच्छा. He said, no, the whole objective is that the customer does when he does, right? What do you mean 5 बजे के बाद नहीं होना चाहिए? Asha, then we went to another, and we are talking to almost like 500 plus banks right now. We almost have 50 banks which are right now live. Then we went to another bank. We said, "Acha, we need to integrate with your CBS." वो CBS को तो हमने निकाल दिया. तो अभी चला कर चल रहा है. अरे मतलब उनको पता नहीं वो क्यों चल रहा है, कैसे चल रहा है. नहीं बोला वो IT वाला है, उसको समझ में आता है. हमारा काम चल रहा है. But just imagine the day it will shut, it's finished. It cannot be revived. Imagine all this information is just gone. It's chal raha hai. Now this is the ironical part of the smaller banks. They are so dependent living on some of the core banking service providers. Now neither is the bank evolved, and neither has the CBS evolved. Most of them have multiple versions in multiple locations. Even they have stopped serving them. Now today, they don't want to go and touch it because they put band-aids and they've left it. They know the minute they will poke that infrastructure, everything will crash. So they refuse to upgrade it. That's the state of some of the smaller banks. Forget that. Then there are bigger ones. A bank is telling his vendor to open up the APIs because they want to get into digital banking, the CBS partner is saying, nahi karunga. And trust you me, this is not the state of some of just the small, the mid, even the largest banks are struggling, which use the largest CBS partners in the country. Why is this? Multiple reasons. Number one, a lot of them use legacy infrastructure, which is extremely porous. And they are actually scared that the minute this will be open to the outside world, they have not built wall gardens enough or safeguards enough to protect the databases, to protect the customers. So now they are very clear, ki boss, whatever happens, happens in the branch now. So tomorrow they can raise their hand, ki boss, somebody came to the branch and stole the data, or somebody came to the branch and did whatever he did, so I'm not responsible. He will not take the onus that, boss, if there was a gap in the tech. So that is the real problem. Now, if we need to move towards digitization, neo-banking and everything, correct? I think the fundamentals are here. Now, as Vikram said, you can't be over-prescriptive, but that's the fact that there has to be some guidelines which kind of either motivates the banks or pushes the banks or nudges in that direction that, boss, this is the next stage. So I have a simple analogy which I give, right? Some of you might have known, I'm sure Abhishant, Vikram, we all know this. Earlier, setting up an email was a task because you had to go to a service provider, get an email ID, then you set up a mail server, then you set up a mail exchange, then you put up antivirus, firewalls and everything, right? Cut to today, I'm sure all of us, we all use Google Mail, 120 rupees per month per user, and we don't care about what is happening at the bank. So SaaS is the way forward, correct? But SaaS can only work if your infra is ready. So I think this will kind of, again, my 2 cents is going to kind of push them heavily to start reviewing it, because if not, tomorrow the regulator may come down a little more heavily and say that, where are my reports, where is the implementation?
Thank you so much for those views. I think I have a very broader level questions of what I understand. There are largely 3-4 parties involved in the whole process, bank being one, fintechs being the other, and then there's a small play of TSPs or what we say technology service providers. So I'd like to hear your views on each segment, on what does it look like for maybe a fintech who's coming into this space or maybe a TSP who's coming into this space, and where do you see the banks going out? Because in the in the guidelines, I think it's mentioned that the technology can be used internally or externally using APIs and all. So where do you see the whole ecosystem moving going ahead?
So this is what we do at OneStack. Sorry, but putting in there, not to kind of hard code it, but yeah. Today, while there are neobanks which are entering the market, one of the biggest challenges which I see in the neobank market is it's got great vanity, it's got great experience, but you're still not putting your money there. It's a good user experience, but you're now going to remove all your money from your bank and put it into a neobank. Even the neobank founders and the investors have not done it. Why? Because the trust is still with the bank. So the roles which each pillar will have to play. Banks is where the customer is, banks is where the trust is, banks is where the money is. Correct? Now, in various financial services which Abhishant and Vikram spoke, whether it is asset, whether it's liabilities, or any other categories which are getting entered, there are various service providers, there are various fintechs which are entering. Correct? If you just look at investments, there's somebody in mutual funds, there is somebody in insurance, there is somebody in gold, and NPS and everything. Now, fintech service providers will approach the bank. So the bank has to be acceptable, adoptable, and consume these services. And therefore, there is a very important role which comes into the play, which is a technical service provider, which is the bedrock, which will kind of put the rails so that the banks can start communicating with various financial service providers or fintechs, what we'd call it. Because if the bank builds only a one-way highway between one fintech for asset, one for liability and all, he'll be restricted. So the idea is that the TSPs will play the role where they will lay down the bedrock, they will lay down the pipe so that the banks can expose their infra, their customers and their services to the outside world, to the fintechs, and vice versa.
Provide layer of solutioning. So mostly when you look at banks work with product very well. But when it comes to solutioning part, while some of them have good solutions, most of the times it is fintechs who know about the final last mile solution that they want to provide. Let me give you a simple example. Right? Let's say you want to provide some payment related solution, right? And let's take simple example of UPI Lite. Now you want to recharge or you want to do something in that in future when it is becoming completely offline model, right? This kind of centers will be helpful to do that, right? And again, when we look at some of these other solutions, right? Let's say fintech who is allowing you to withdraw funds using your APS, right? That is again one of the part which will connect to that. Another example, let's say you have a solutioning where it is a customized solution for some of this education fee payment or whatever it is, right? So those things again you will see on the lending side. Whenever we talk about this lending, it normally starts with ability to pay, intent to pay, so on and so forth. But ultimately, it always says recovery part is very critical. So let's look at the recovery part. That is again where you can go and do some of this thing, right? So it is more around that solutioning, how you can create that ecosystem in that community, in that area. And again, from day one, I can give you the idea that it will not be a place where everyone will come suddenly and do something. Right? It is not going to be like that. It will take some time for people to look at the utility of it, look at the value of that, and then it will become more and more, in a way, popular for that region. Right? And finally, when you look at the future of this entire thing, look, right now, the revenue sharing, whatever happens, why banks are ready to do that? Because the distribution part is sorted by someone else. Banks are saying, I'm providing my pipelines, let others do the distribution, where I am not the right person or I don't have the strength, let them do it. I can handle my corporate clients because there is a value game, so I can have a very good relationship. But wherever it is a volume game and where I'm not present, let others do it. For whatever banks you look at all the partnerships, that is the theme behind it, right? So when we look at this specific thing, similar thing will happen. In some of these areas where any which ways I don't know much, but I want to have a presence, this is entire thing is going to get in a way outsourced. Somebody will put the infra, somebody will put the solutioning, and everything will work together. That is my view.
For sure. I think इसमें सबसे पहले what is important is to look at why DBU, and you talked about constituents, but सबसे important constituent which you left is the consumer, the one who is going to use it. So who is that? In case of a DBU environment, I'm sure you are not expecting any one of us living in a tier 2, tier 3, tier 4 city to be walking in here. That's not the consumer. The consumer that you intend to address from a DBU point of view is the one who is currently not digitally banked and potentially can be served in a manner in which assisted digital can be given to them by a branch, by a bank, and that's how you want to serve, and you intend to expand the use case for that consumer. So that's the consumer you intend to serve. So as a result of that also, to a large extent, that customer and those locations and those branches within the DBU environment will largely belong to tier 3 or tier 4 environment, and be rest assured, your top tier private institutions who have branches in those environment, your top tier other institutions who have presence over there won't do it. It's essentially who is going to get into it is going to be a UCO bank and a Union Bank or an Indian Bank or an Indian Overseas Bank. That's why if you look at last 1 month, you will see that Union Bank announced they are investing some 1,000 crore to create an app environment or a neo bank environment. Day before yesterday when we were there in Chennai and we were talking, we were in Indian Bank and they were talking about they need to grow their current base of digital users from mobile point of view from current 50 lakh to 1 crore in next 1.5 year period. So essentially who is going to be the bank? The bank is going to be that tier 2 bank which was not digitally ready on its own, first and foremost. So the first journey is that bank undertaking a journey from being a digital novice both at its customer servicing end, its clerk, its operational guy, its lender, everyone else who used to look at the book and then lend, who earns less, understand it, right? In the same manner, you are making digital banking custodians to people who first don't understand it, so you need to first help them understand. Then to help those understand who have never undertaken a digital journey will be a foolhardy piece. So therefore, you will have to build a data analytics value chains on top of your current set of current account and savings account customers to be able to identify which set of my current customers are potentially capable of undertaking a digital journey, assisted or on their own. then your core banking should be in a position to ping when the customer is in front of a cashier, of a check maker, of a draft maker, of a lender or anyone else, that this is the customer who is ready to be in digital. Otherwise, you'll ask everyone, sir, app download kar lo, sir, app download kar lo, sir, app download kar lo. What the heck you will achieve by doing that, right? So it involves multiple pieces. Bank readiness to be digital native, bank staff readiness to be able to serve digitally well, having the right kind of data analytics to be able to identify the set of customers whom you can serve digitally well, fintechs who can provide all of these solutions, and lastly, a customer who can be digitally native. You cannot essentially offer it to complete novice from day zero. Otherwise, it will happen like us, which happened with me. I'm sharing a personal foolish piece which we did. For the first time I walked into a cyber cafe was in 1998, and the first website I opened, and I don't have any shame in sharing that, the first website I opened was desibaba.com, and I did not, some of you are not born, so I don't have issues in that. So, and that was the first website I opened, and then it opened 50 other websites because it was a pornographic content, and it opened some 50 other websites, and the only thing I knew was to shut the server off. We don't need bankers and customers who will shut the server off. That's the DBU journey which we'll undertake.
So small thing here. So in fact, when I told about this cyber cafe example, right? So when you look at the journey of this, once the objective is over of this entire stepping stone, this will become in a way on its own, let's say, a dinosaur. Right? So when you look at, this is a stepping stone, frankly. So when you look at, the idea is to make people digital native, but not all of them will become, for sure. Right? So when we look at, I spoke to few of them, bankers who are now implementing this or discussing on this implementation. Their target audience, interestingly, is some 35 to 45, not even beyond that. They are saying this is where they want to do it because they don't trust anyone beyond that. They are saying that even if we put that effort, it will not happen. So I said, why? So they said that whenever we look at the ROI in that, right, the response time that you get, the effort that you put in, so we will do it on their behalf, but we are not trying to do it in a way that we will bring them online. So they come to our center, we will help them out, but we are not even going to force them or try to make them digital native. As you rightly said, right, people, analytics, all these things will be in place, and they themselves are envisaging that once the purpose is served, right, today if you look at, you will hardly find any cyber cafe in Mumbai also, right, because everyone has internet on their phone. So if that is the reality, then this is the product which will die after its own success. That is what I think.
Sorry, but I always have this little contrarian view on this. Unfortunately, whenever we talk of digital native, right, and this is the sad part, it's like when international markets show India, वो हमेशा गरीब हिंदुस्तान दिखाते हैं, वो हम कभी नहीं दिखाते. And whenever we talk of digital native, we straight away think of a 50-year-old man and 50-year-old woman doing farm, laboring and everything, correct? Unfortunately, we forget to understand that there are enough and more of those users in metros. Let me give you specific examples, correct? We all have domestic helps at home. We have drivers, we have liftmen, we have a lot of the vendors, the milk vendor, paper vendor and all. Whose customers are these? Which bank's customer are these, right? Do you think these are private sector bank customers? No way, correct? You and I struggle getting service from private sector banks. Imagine these poor guys walking into that branch. They will not even walk in because of their inhabitations and the language that they will talk in English and all, they don't, correct? They struggle with these private sector and these big banks. There are enough and more cooperative native banks in metros, in our cities, and this is where these consumers are banking. So that's the number one. Number two, please do understand, we take great pride today when we make a Google Pay payment to our taxi fellow or our vegetable vendor, like I did digitization. Now please do understand, he has also become digital, not native, he's a little more mature because he started accepting money and he started using the interface of these PSP app. So it's not that bad, he's quite there. It's unfortunate that his bank doesn't support him in all of this, hence he is dependent upon the private sector players. Now, my fundamental belief is that tomorrow when his bank will start offering it, right, with the trust of the bank, with the money in it, he will really be able to leverage it. Right now, they are not able to leverage it. But tomorrow when his small cooperative bank, which is where his money is, which is where he goes in, walks in with pride and says, oh, मुझे 200 रुपए का withdrawal करना है. Trust you me, that's a lot of money for them. Correct? We don't look at it, but you should actually see the state of it. We work with one of the banks in up north, and you should, like Abhishant said, right? It's a one shutter branch. They call it a unit branch. And we were like, what is your specialty? So his one line was, ये city के जितने दूध वाले हैं ना, वो हमारे यहाँ बैंक करते हैं. I'm like, what kind of like there are dairy banks which are getting, but he's been doing it for 30 years. I said, what is unique about you that, and opposite him there are private sector banks, but he's in a very shut down shutter and all of it. He said the unique USP of our branch is that these guys, whenever they are crossing this road, because they have to do pickups and deliveries through the day, they just stop and they just give the money over there. No receipt, no vouchers, nothing. They just stop, they give the money and they go. And I said, then, he said, end of the day, evening time, they come and they get it and the passbook is updated. So he has built the trust to such level that if somebody comes and says, I've given 1,000 rupees and 100 was less, if he says it, he trusts them, he will give it. If he said, I gave 1,000 rupees and 100 was more, the cashier will give it back to them. Now, unfortunately for him, he said, so I said, why do you need us? He said, the problem is, today all his customers want to pay him digitally. Correct? तो बोला अगर इसका digitization मैंने नहीं किया तो ये चला जाएगा. So the banks are also smart enough in our metros and beyond that they know the power of it. They are lethargy, as they said, they are closer to retirement, they don't want to touch it, but they are aware if they don't do it, they may perish. So therefore, they are also taking steps, slightly slower, but eventually they will.
That's a very interesting story, and in fact, while we travel up north, we see a lot of such people who are waiting to get digitized, right? And their problems are real. It's as small as going in the dark amongst the trees and not having cash and walking freely, right? That's a story we've heard. But I think of what I picked up a few points, right? Digital services, analytics-led lending, maybe customers, you already have customers, right? Increased user engagement. These are some of the things that I picked up while we talk about the DBUs. And this to me sounded almost like a neobanking pitch, right? So what's the role of neobanks after the whole DBU guidelines have been set up? Will they be kind of seeing some kind of competition from the existing bank? Of course, minus the CAC that they find hard to deal with, right? So what's the situation there? Your thoughts on that?
So actually, if somebody visits our website again shamelessly, that's our mantra. We are here to make every Bharat bank a neobank. That's what we do. Banks who have the trust, who have the customers, we are saying now we'll give you the infrastructure so that you can compete with the neobanks. Correct? And my belief is, well, neobanks are here to stay. There is a little bit of a flirtatious nature over there because consumers like it, they are experiencing it, but nobody's kind of living with it. So they will keep doing it, but the money's going to remain here. So we are like, we'll help them, empower them so that they can actually compete with all of them.
I've heard you say a couple of times that people download neobanks and they don't actually stick to it. Right? That's, I mean, probably we're talking about our generation, like people between 25 and 40. But what I truly believe when neobanks will actually take up is when Gen Z actually starts pouring more and more into workforce. These people, I mean, we are not trusting neobanks because we have a we have a banking native experience, right? We are used to going to a branch. At least for opening my first salary account, I had to go to an HDFC branch, do the paperwork. When I had an issue, I had someone to talk to. Here, when you talk about Gen Z, they're हाथ में phone लेके पैदा हुआ. I mean, those people are born with that, and for them, they don't need to put a face to a place where they can put their money, right? Like we have that need. Like sometimes, अगर पैसा transaction नहीं हुआ तो if Google Pay my transaction fails, they'll probably want to call up someone कि क्या हुआ. But I don't have that facility right now. Maybe it's just me. I'm a bit more traditionalist that way, but if you look at Gen Z and generations after that, I think that would be a completely online experience. Those guys wouldn't actually need touch points or all of that, at least in tier 1 and cities. And just from my experience, like when I was working with Abhishant, he had pushed me to go and travel to rural area, right? Like right now also he said कि छुट्टी लेके चले जाओ एक बार पता चलेगा. So at that point of time when I had gone, I did observe that anyone like if you demographically divided people below 30 years of age normally were very digitally native. They had all phone pay, Bharat Pay, and there were QRs over there which they were doing. So that was the first step for their digitization. Of course, that was also backed by all those Aadhaar Seva Kendras and those PC outlets which were offering semi-digital experiences to those guys. How would you think that generation accept neobank when it comes from their cooperative banks and all of that?
So you're absolutely right? While the Gen Z is a little spoiled for phones and everything, and the dependency is very, very high on it. But you have to look at what is happening globally as well, correct? Open banking in India has come now. Open banking in the UK has been for the last 15 years. And trust me, even one of the biggest ones are struggling. Even the US market, they are struggling. Same thing. UI UX definitely plays a very, very important role, but when it comes to trust, the money doesn't go. And there are enough and more use cases where the bank will not be able to part out those applications and services which some of the neo OIs are doing. So I do believe yes, and that is the reason why they have to invest, right? Let me give you a relative analogy. In India, if you see how retail has, right, you have to look at the parallels. We had all store formats. We had our mom and pop kirana stores, which we call it. Then we had the supermarkets. Then we had a host of them: Vishal Mall, Mega Mart, Vishal Mega Mart. And then we had Big Bazaar, Reliance, and all of it, right? Now look at it where we are today in the retail market. There are only the big boys which are left, and then there are the mom and pop shops which are left. Correct? That is something similarly which I do believe is going to happen in banking. The big banks will continue to grow, and then the mom and pop kirana stores, which have never been catered by the public private sector banks because of the reach, they will continue to serve it. Now they have to hop on. And if you see, that is what the startup ecosystem did also, right? Look today what is Zepto doing. Look what a Dukaan is doing. Look at what a Bharat Pay did. They digitized their payment part of it, and they are able to flourish today. That is something what will happen. Because privatization of banking happened in India 50 plus years ago. But the banks of the private sector refused to go outside 150 customers because, as Vikram said, ROI nahi banta. They refused to open a branch. Why? ROI nahi banta. ATM privatization and ATM co-branded and white label ATM happened almost a decade ago. And the largest Tatas of the world also were not able to successfully deploy it, and they refused to deploy it after a point, saying, boss, ROI nahi hai. So, for a branch to be catering, for a customer to be catered, at the end of the day, it is very important that there is a physical touch point for him. So it's a little going to be a hybrid kind of a model, right? Digital natives, yes, he will start experimenting it, but at the same time, he knows that there is something behind it. So that is my two views on it.
Just add to what we discussed right now, right? So the original question was on the neobanks and the differentiation that will happen, or whether the competition will increase. So let's look at the commercial. Everything moves on commercial. Nobody is here to do social service in a way, right? So while there are people, but I'm saying that it is very hard to do it on a continuous basis. So let's look at what will be the commercial around it. Right? Anywhere around, let's say, 5 to 10 lakh rupee minimum you will have, even for a single center, something similar, minimum. And you can have bigger center also with more cost. This is what I know from the market. Minimum, this is the cost in the tier 2, 3, 4 city. And when you look at why somebody will do it, when you look at the banking is becoming kind of utility company, right? You know that the margins are becoming very well, right? Was to work on the technology part of it, experience part of it, and the scalability part of it, which due to lack of agility and flexibility, banks were not able to do very quickly. That is what they did very well. And because of that, the way they could grow with partnerships, right? Neobanking has been glorified partnership banks, right? And because of that, when we look at the way they were able to approach all these different questions, right? The way you can pick and choose products for your own strength, for your own demographics that you want to serve, the data science that you can bring. So all those things became very good for them to scale up with the positive ROI, while making sure many of them are still negative unit economics, you know that, but still many of them became positive, including this networks which were BC networks, similar to Pay Nearby, etc. It is a quasi neobank, I can tell, but any which way. So that is what it is like. And many of these people realize that there is a play on liability side also, like what Jupiter and let's say FireMoney did. Along with that, many people thought that there is a bigger play on asset rather than liability, because that is what they thought. Right? So everyone has their own viewpoint, everyone has their own distribution strategy, which they wanted to go with, and that worked. Now, when you look at, on the other hand, you have India Post, right? And when you look at so many centers out there, and if they can do something, some similar as a center setup, then it is a very different ballgame for doing it, because they have the infra, they can just put it. It is a very different ballgame. But no, we are not looking at that right now. We are looking at something where neobanks versus, let's say, this center, DBU center, right? Now, just to conclude on this, DBU is not going to be equivalent to neobank directly, because of the simple reason that this is led by bank. Even if, because this is the finance ministry mandate, come what may, you will set up that 75 in 75 district, right? That you will do for sure. But if you ask me, if somebody will do it so moto beyond that in some areas which is not profitable, I don't think so. Somebody will do it in areas which they find are useful. There are data science or locational intelligence companies available, right? Let's say data system, etc. So if they do that analysis, footfalls, identify the category and set up profitably, then that is a good play. Where the banks will get greater margins. That is the play. And the pie is so much bigger, I can tell you, that this is just increasing the pie rather than eating up the pie. So in this scenario, the pie will increase more than eating up somebody else's pie. That is the final conclusion that I want.
Thanks, Vikram. So, first and foremost, as Vikram said, and also Amit has shared, the idea of a neobank versus a DBU are fundamentally different, and neobanks as such, at least from a, and as you all know, regulatory clarity point of view, there is nothing called a new bank. So basically you have a prepaid or a debit which is offered by a bank, and you are just an outer layer for that at this point of time. So there is nothing on that direction, and therefore also you do not have a direct play in the DBU environment from a new bank point of view. If you look at the decade examples of specifically European environment, the examples except for Oak North have actually not gone deeper into the consumer value chains. The value chains which have gone deeper, Nubank, Kakao and others, started fundamentally differently from what European neobanks started. So therefore, in our case, in our environment at this point of time, you can see two different type of neo-banking value chains emerging. One is what you are defining as neobank today, which is Fi or a Jupiter or a Finin which got purchased by Open and others. So that's the first kind of a value chain. But in my mind, the better and more competitive to them will be a value chain which is going to be OneCard, Slice and Frio and Uni. Why they will be better neobanks? Because fundamentally they are starting from a moat in which you make money. So in my mind, as Jupiter moving from credit to insurance, to mutual funds, to savings is a far better journey to undertake rather than taking a Jupiter which is savings, then trying to offer wealth products and then some stage offering credit. So both of them, one is moving in this direction, other is moving in this direction. The fundamental difference between both of them, apart from the fact that both of them subsidize your Swiggy food, is the fact that one is moving in the direction wherein they make money on every transaction, which is credit side of the neobank journey. Other is moving in the other direction wherein they are going from the savings side wherein they don't make money on a table one or a better from the OneCard price part of the journey, the moment they decide to undertake it. Frio already took that journey and they did those of you who you know them, 2015-16 is when they started. They started from a company called MoneyTap. MoneyTap offered credit and they continued in that value chain. Over the period of time, they essentially pivoted sometime in early 2020 to venture into the direction wherein they started calling themselves a Frio, which is essentially, so they have undertaken a journey from credit to savings, wherein you have some level of moat versus a Jupiter or a Phi kind of a journey, which wherein you practically do not have a moat. So in that sense, or if you, I don't know what they define as moat at all. So that's the difference. So first and foremost, you do not have a regulatory view. In any case, RBI just came back day before yesterday stating that whatever Niti Aayog says, we don't subscribe to that from a neo banking value chain point of view. So there is nothing in that direction. As such, DBUs, as I said, won't be competing with these people because they are fundamentally different from a thought process point of view, and of course driven by a scheduled commercial bank, which is a license holder entity versus a prepaid license holder. That's on the first part which you asked, Sagrika. The other piece which you referred, Shreyas, which is essentially around the Gen Z or the customers who are born from a digital value chain point of view and who are opting for that ecosystem. So look, you are building yourself day in day out in that manner only, which is you deal with an Instagram, you do not essentially have a customer service value chain in that. You deal yourself from a Snapdeal point of view, you converse on WhatsApp, you connect via other mediums, and you do not have any way of interacting with somebody who is going to offer you a service to help you understand and appreciate that service. So it's essentially the way you are born, and because that's the way you are born, you are not in that mind wherein you need to transition from having something earlier and then accepting something else. Those of us, very few of us who were born in 80s, we are born in the time wherein then get a tambe ka sikka and then go back in the afternoon to collect that demand draft. So for us, it's a journey. We have seen a change. We have seen a change from non-core banking environments wherein it can take up to 6 months to clear a check. I still remember in 2005, we had sent a check from Korba to Champa, which is 47 kilometers from Korba. That check of PNB took 5 months and 27 days to get cleared, which is just 47 kilometer distance. Because the bank, which was Punjab and Sindh Bank in 2004, did not have core banking. So therefore, the check took that much kind of time to essentially get disbursed into the account of anything. So we were born in that environment. Somebody who is born in 2098 or so was never experienced or never looked at those things. So जिसने देखा ही नहीं, उससे कैसे expect करोगे कि उसको वो चाहिए तो उसको होता है जिसको पता होता है कि वो क्या था जो चाहिए था. जिसको पता ही नहीं है कि उसको क्या चाहिए, तो उसको जो मिल रहा है वो वही है जो उसको चाहिए था. That's the fundamental difference. So it's a question of knowing what you need versus knowing what it is and then going for what it is. So that's the fundamental difference. So therefore, in that sense, a Gen Z who has never seen a father disbursing entire cash which will come in form of salary for using debit card, thinking the fact that boss पैसा मिलेगा कि नहीं मिलेगा, अगले दिन कार्ड चलेगा कि नहीं चलेगा, तो उसको पता ही नहीं. He doesn't know, he or she doesn't know that what does it mean कि कार्ड नहीं चलेगा. What was the world before that? How salaries before 95, 96 used to come directly, used to get handed over directly in form of cash to every single individual. So when you have not seen that, you don't know that. So therefore, the question itself will not arise. It's like living in a matrix. You will need a Morpheus to realize what is the other part of matrix. Unless you realize on your own that you are the Neo.
That I would like the panel to quickly highlight which are aspect they think that they can actually put the most light on and about it.
So at least in my mind, what will happen is this: that first and foremost, I think it will elongate the life of a banker who is willing to kind of do more. What will it do is that specifically the DBU banker, who is the last mile banker, who potentially will become digital native because of this, or will become digitally aware. A lot of them, so we'll have a lot of PSU bankers potentially becoming consultants, because some of them will realize that their potential and their value chains can be utilized in different manner, which doesn't exist at this point of time, which will be a great addition to the requirement of the knowledge providers we need at this point of time. What do I mean by that? What I mean by that is that one of the reasons why we don't see number of fintechs emanating out of a Patna or a Jaipur or a Visakhapatnam or multiple other places, because of the fact that the founder who is possibly originating from that city doesn't get access to the knowledge which can help them build their environment, while they are appreciative of the tech, while they can build the tech, but they don't know that if you need to do a trade finance transaction, what is there which is in between an importer and exporter from LC issuance to LC discounting to multiple other products, because they don't know that, because they are looking for subject matter experts and multiple other value chains in that. Somebody, and also somebody who has some view or some awareness of the way those things will happen digitally. So possibly it will lead to a set, and it is something which I'm talking about a decade down the line, not today. It will lead to a lot more digitally aware PSU bankers who can potentially at that point of time add a lot of value to the startups which will emanate out of tier 3 or tier 4 centers, which currently is a big gap. So that's one thing possibly which can happen as a result of this. The second, obviously, the set of beneficiaries which will emerge out of it will be the obviously the fintech startups who will start serving this as a segment. Of course, a realization of the fact that you will require an assisted value chain, assisted method to address that is of course going to be one of the drivers. Second, as I said, digital analytics and other pieces will become a driver. A lot of these banks do not have end-to-end KYC from a savings or a current account point of view, will become a big driver, and so on and so forth and all of that. I was just, when I was reading today's newspaper wherein ICSA said that we are offering every single damn thing from a SME point of view in a digitally driven environment, and that's the same thing which Yes Bank also claims and other things. In that value chain, I was thinking that why don't they hive off one of their entities to create a tech arm to essentially serve all other bankers to whom they can offer this as a service, rather than just keeping that. So think of the fact that what Starling Lady did in UK, or what Fedor did around half a decade back in Europe, or what Mambu and others are trying to do. If you simply hive off whatever you offer from a digital native experience point of view, one of the bank which has largest possibly a set of APIs or infrastructure as a service can possibly hive off as an entity and make it a unicorn on possibly day 2. So from a point of view of some of these institutions, a newer set of institutions may emerge who may want to offer digital infrastructure as a service beyond what YAP and others do to offer these to these institutions. Data analytics obviously will play a key role. Being able to kind of consolidate all your data sets under a single data lake in the bank environment will be a big piece, because single data lakes is what will essentially help the bank make better decisioning on terms of the customers they can serve. So that's the piece which will emerge out of it as the next set of opportunity which will emerge out of it. Possibly a few other things which will happen out of this is a new set of startups potentially will emerge out of this, which will be in the L&D space from a fintech point of view. These will be entities which will help these DBUs offer and help them appreciate what kind of consumer awareness that these 75 DBUs established by maybe 40-50 odd banks will essentially have to train their internal employees to get ready with it, which means it potentially will need a lot of L&D organizations which will go out and train these bankers, will make these bankers aware, will help them build their own understanding of the subject, and therefore a great UI UX led. And in that scheme of thoughts, which is a banker which is sitting in Chaibasa serving Runta mines in Jharkhand, that banker possibly working with a PSU may not be able to appreciate the entire content offloaded to him or her in English. You will need a new set of content being delivered to that customer, because neither the customer nor the banker are thinking in English. उनके अपनों और सपनों की भाषा अंग्रेजी नहीं है. So अगर उनके अपनों और सपनों की भाषा तमिल है, बंगाली है और कुछ और है, तेलुगु है, so you cannot essentially deliver them a L&D content which will be delivered in English, and you expect them to deliver it transliterated in the manner in which it is appreciated by them. That's not going to happen. So you will see possibly creation of new set of L&D organizations and others, or maybe existing set which will serve these sets. Thank you.
So in fact, Abhishant covered most of the stuff which I wanted to also speak, but great, it saves my time. But one thing which I would like to add there is, when you look at, it is an interesting story. So when I saw, exactly I remember it is in 2004 when I was looking at, as a part of Deloitte, I was looking at some of these ATM manufacturers and some trade fair. And one of the ATMs, they said it is specifically created for villages and tier 3, 4 cities. I said, what is the difference? So he said that the UI UX is very different. I said, let me see, what is the UI UX difference there? So it was like this big font with only 2 lines in a screen, and that too grayscale, and only this big of a button. So I said, okay, who is going to use that? So everyone, they said, is going to use this kind of a thing, because in villages, they want to see one button only, they don't want choices, they get confused, right? So that's what he said. Now, when you look at the opportunities here, is to identify based on that persona, based on the age, etc., how the even UI UX can change, right? That is also one of the opportunities. So when you look at this entire journey from the perspective of the right time, where to set, when to set kind of a scenario, that is where the fintech also will come to play in this, and then even the banks, right, who are identifying right opportunities at the right time and right place can make huge, not revenues I will say, but huge margins initially, because not many people will jump into this to begin with. If you do it correctly, then you will increase your pie organically, and very soon, as you mentioned, right, if let's say there is a TSP which is doing this at a scale, suddenly that TSP also becomes a huge beneficiary of this new guidelines, right? And I can tell you for the sure that initially it will be around 75, whatever is the mandate, it will start with that. People will test the water, they will do the dipstick, then identify whether it is really working or not, and then based on that, they will expand very soon. So in my opinion, within a couple of months, some pilot will start. After that, in phase 2, people will look at what is working, what is not working, and then they will grow.
It's done, right? These two have covered more than you can ask for, actually. I just have one line to make, right? When we started, like when I went to banks early in RBI days, and we used to go and as a fintech, they used to always treat it like as a threat, correct? The banks had this whole dichotomy that why should I work with the fintech? Fintech is a partner or he's a threat to the bank. I think the fundamental change which is going to happen with all of this is that it's a cohesive environment. One needs to collaborate, and I think the banks have also realized it, that we need to collaborate with the fintech players to kind of survive for the next wave, and I think it's a great opportunity for all of us.
Thank you so much. I think we are done with an hour, so I'll open for a few questions if the audience has others. Yeah.
Hi, this is Shweta. Now with these DBUs, RBI is encouraging banks to set up maybe an independent unit, outside the bank.
Even let's say ink tablets which are there, right? So that the power consumption is lower and whatever it is. So I have seen a couple of banks working on that ink display, which is a one-time cost, but it saves energy and so many things. Some of them are just working on that digital kiosk and trying to do this, but the security and everything that you are envisaging will be equal to your, let's say, ATM kind of a scenario. Of course, some of the differences will be there, but moreover it will be similar. When we look at on the audit and everything, it is subjected to the same thing that you are supposed to go through. But of course, if some other guidelines they want to issue, they will issue. But right now, whatever is implied is that you are trying to have a similar security in whatever sense, right? So it is a client in a way, in a client-server environment. So whatever endpoint security you need to put there, you need to put there. So these are the two things that everyone agrees on the market today. And going forward, if there are new guidelines which are applicable to them, they will need to do that. For example, that IoT sensors wise, you cannot do something. It can only emit the frequency, but it cannot accept the frequency. All those things, if required, they may put it. Right now, there is nothing like that.
Thank you. I have a quick question on the point that you were bringing out, Abhishant, and the question that you asked, right? Differentiating the neobank versus DBU. And the point that you made, I mean, I really like the point you made about credit to savings versus savings to credit. It's quite good. But my question more so is, so whilst I agree broadly on the view of, say, a broad-based neobank which is trying to do everything for everybody, there, of course, the banks will sort of take over and that's fine. But what do you feel about these demographic-specific full-stack neobanks? For example, you have something like a Basis which is doing specifically for women. You have something like Khayal which is doing specifically for senior citizens. You have Pencil Dance specifically for junior, let's say, teenagers and stuff like that, right? Which the differentiation in my mind is that the way that you're looking at the customer and you're serving a customer's very specific needs for that particular demographic of the population. And that demographic of population in India itself is massive demographic, plus you go over the world and you have a lot more. So do you think even that would sort of somewhere become, I don't want to use the word irrelevant, but say less relevant with this DBU coming in?
So I think first and foremost you need to see that when you're talking about domain specific value chains, whether it is senior citizens, whether it is for young adults, whether it is for creator economy, whether it is for anyone else, if you are principally solving only for transactional needs, you're not solving for anyone. What do I mean by that? What I mean by that is that if you are solving for a larger problem for that segment, and then embedding financial services into that, then it makes much greater sense, and because then you have stickiness of the value chain. Otherwise, you are never the principal custodian of people's money or trust. What do I mean by that? If, say for example, you are talking about something for senior citizens, are you fundamentally into elder care and then embedding financial services into that? Then your stickiness or your moat is elder care. On the top of which you are building financial services, which serves the same elder care which is required. Access to adult diapers, access to doctors, access to other things. So as a result of that, you are in a position to address that segment better. If you are fundamentally talking about creator economy, then if you are a Fiverr, you are solving for fundamental piece, which is access to capital, which helps the creator economy to grow. You are getting access to business. That's a moat. Access to business is the moat. Access to elder care is the moat. All of these are the ones which brings stickiness from a value chain point of view. Otherwise, just think of the fact that the same elderly individual or a same creator has access to so many other offers and service providers. What is that which you are going to give apart from giving me something on Swiggy? Or you are going to offer me some 150 rupees extra to buy a ticket from Book My Show and things of that nature. Are you fundamentally... So domain specific value chains work better if you are fundamentally solving for that domain and financial services is a part of it. Going the other way around potentially may not help it. Then DBUs, as we discussed, are fundamentally different value propositions. DBUs are supposed to provide deeper penetration of financial services in identified 75 locations, and that's what they are supposed to do. A customer who becomes financially literate from that value chain, they're serving for, to an extent, financial literacy or financial inclusion. That's the principal agenda which they are serving. So therefore, they are different in that sense. You can have a progressive value chain wherein you learn and you build your awareness with the DBU environment, and then you move into some other environment. But then that other environment should have certain level of moat to be able to cater that environment rightfully. That's why in some of the occasions, on the contrary, my view specifically is on the contrary of it, which is rather than going that way, potentially you should look at when was the last time a bank or a financial institution actually created a successful senior citizen product. If they didn't, then in my mind the better opportunity is to to create an entire ecosystem from a senior citizen point of view and then white label it and make it available to the bank. In that case, your CAC goes down, your cost of customer acquisition and your cost of serving that customer goes down. Think of yourself as a microservices architecture led a white label solution which neo-bankizes the health and elderly care, wherein you tie up with an Athashri from Paranjpe, or wherein you offer a diaper, adult diaper in association with somebody else and all of that, and you package that, put it together and make a white label offering from a bank point of view far more better. In that sense, you are not going out there to acquire every single customer. In the same sense, when was the last time kids account really got revisited from a bank's point of view? The first time it was 2006, 7, 8 when ICICI attempted the child saving account, and then again in last 2-3 years they are again trying to do something on that side. In the same sense, going to these value chains and potentially building with them will help you work on the lower cost value chain rather than trying to do, unless and until tomorrow somehow you create something and you get a Sequoia to splurge and search with you, and therein you will have to obviously be clear about your ethics and their ethics to essentially do things rightfully and ethically. You don't create and manufacture numbers. I don't care a damn for them, so I can speak what I want to. Others do, so I don't. So that's my point of view.
Hi, my name is Vivek. मेरा जो क्वेश्चन है, मेरा एक्चुअली स्टार्टअप है वेब डेवलपमेंट बेस्ड. सो मैं एसोसिएट करना चाहता हूँ फिनटेक सास कंपनी से. सो अभी आप बात कर रहे थे कि फर्स्ट ऑफ ऑल लिटरेट करना पड़ेगा लोगों को इसको ज़्यादा प्रमोट करने के लिए. तो क्या ये बेटर नहीं होगा कि जो ऑलरेडी कुछ दूसरे सास प्रोडक्ट्स सेल कर रहे हैं या दूसरे डेवलपमेंट का बिजनेस है जिसका, तो वो उन लोगों को उस पर ट्रेन करें, उसके बारे में बताएं, तो वो इन टर्न उसको ज़्यादा लोगों तक पहुंचा पाए. क्योंकि जो बड़े प्लेयर्स हैं वो तो ऑलरेडी इस्टाब्लिश है और उनके पास बहुत सारे मतलब एनालिसिस, स्टैटिस्टिक्स और दुनिया भर का जो भी इन्वेस्ट करने के हिसाब से है. सो क्या ये अच्छा वो नहीं होगा?
So very quickly, let me answer that. Look, it is the free market, right? So even you can compete, others can compete. You may say it is not a level playing field, but yeah, people can work on cost, people can work on quality, people can compete based on, let's say, offering. You may have your moat in maybe identifying some data analytics. You may have your moat in looking at solutioning